So hi guys, I'm Maria Mali. So today guys, my main focus is to teach you all. Now, if you go to grade 13, okay, so this is grade 13, the first chapter. I'm not going to finish the first chapter. Actually, the first chapter, it's really big. Okay, I can't do that. It takes a lot of months to finish, maybe like 3-4 months or more than that. So yeah, it's not easy to finish it. So guys, today my main focus is in the first chapter of grade 13. Okay, first chapter of grade 13. So my main focus is to get you all through the conceptual framework. Okay, to go through the conceptual framework. So it is included in the chapter of accounting standards. Okay, so it is included inside that. So guys, grade 13 is really interesting. Okay, if you take the accounting syllabus, for me, in my point of view, compared to grade 12, grade 13 is really interesting, but I'll tell you all the truth, it's really challenging also. Compared to grade 12, grade 13 is challenging, okay, but it's interesting. It's interesting because you all have to prepare company accounts and all those stuff. So that makes it interesting rather than just doing prime entry books and stuff. Okay. So I'm not telling grade 12 is not interesting, but I feel it's better than grade 12. Okay. So some of y'all here are grade 12 students. Okay. So y'all also will understand. Okay. You don't have to worry. Y'all also will understand because some of y'all wanted to just join and see. It will be like you will get a good knowledge about today's class. So no worries, you will understand. Okay. Yeah, fine. Now I think we can start. So guys, if you take accounting standards, okay, if you take accounting standards, so this was given in the teacher's guide. Okay, so these are the standards you have to know. These are the standards you have to know. And if you want to prepare company accounts, if you don't know these standards, guys, you can't prepare company accounts. What is company accounts? Company accounts is where, guys, now if you take business organizations can be sole trader, partnerships. There are different types of organization, right? So a company is also one type of organization. Okay, so now the companies also have to prepare accounts, right? So to prepare accounts in a company, you have to follow this accounting standard. It is compulsory that you follow them. If you don't follow, guys, you're going against the law. You have to follow if you're a limited liability company. So then, guys, in order to prepare financial statements following accounting standards, you need to know what are these standards, right? So that's what we are going to study. Okay, so guys, if you see these, there are 1, 2, 3, 4, 5, how many? 6, 7, 8, 9. Okay, so there are 9 standards, guys, you all have to know. Actually, there's another one, income tax. It's a small one. Okay, so guys, you have to know these standards if you want to prepare company accounts, around 10 standards. Okay, but this cash flow statements, this standard, it will be taken separately. I mean, in your exam, they will not be including this with the company accounts. They will include this separately in a different question. Okay, so guys, these standards you need to understand how to do, what is told there and how to record them. Okay, you can't go against it because you have to always follow these standards when you're preparing statement of profit or statement of financial position. So all these, guys, when you're preparing, you have to follow these standards. You have to follow these standards. Okay, so guys, after this, today we will not be studying any of these standards. Today we will just go through the conceptual framework. Okay, so after today, that is the next class, the next theory class, we will be starting with LKS 2. That is about inventories, how to record inventories. Okay, what if there is an inventory written off? How are you going to record it? Inventory loss, how are you going to record? So everything related to inventories will be told in this standard. Like that, guys, if you take every standard, there is a specific part which they will tell us about. Okay, so guys, now see, you all have a doubt, right? What is this accounting standards? What are they? Guys, these are required rules. Okay, these are rules. Who provides them? Professional institutes. This professional institute, you know, Chartered CA, ICA Sri Lanka, Institute of Chartered Accountants of Sri Lanka, ACCA. So there are professional institutes who are preparing these accounting standards. They are the one who develop, who make accounting standards so that the companies have to follow when preparing their financial statements. Okay, so accounting standards, they are provided by who? They are provided by the professional institutes. In order to follow, when you recognize means, guys, now you have to first of all identify, right, whether it's an asset, liability, income, or expense. So you have to recognize. So when you're recognizing, these accounting standards help you to recognize, measure. After you find out, okay, now you have found out, now you have a table. Okay, so now you have to recognize this table. Recognizing this table means, guys, okay, you have found out, okay, this table gives all the satisfies all the definitions related to assets, all the conditions related to assets. So we have come to a conclusion, this table is a non-current asset. You have come to a conclusion, it is an asset. After you recognize, guys, you have to measure it. Measuring means, guys, you need to know, okay, this is a table, it's an asset. Okay, how much is it? What is the value of this asset? This is where, guys, you measure it. You have to measure. And then, guys, after that, you have to present. You have to present means, guys, how are you going to record it in your financial statements? Where are you going to record? Now, this asset, you will record in the statement of financial position under the heading non-current asset. So that is how, guys, what these standards, they help you to recognize, measure, and present transactions. Okay, so just, guys, don't try to memorize stuff, just try to put it in your head. Okay, understand what I'm saying here. Okay, when you understand, guys, it will become very easy. Any subject you understand and study, guys, nothing is going to be difficult for you. But when you start memorizing, it will, that is where the problem starts. You will hate that subject. Okay, so guys, again, repeat it. So accounting standards, what are they helping us? They are helping us to recognize, measure, and present transactions. Okay, so guys, if you take Sri Lanka, in Sri Lanka, guys, accounting standards, they are developed by whom? They are developed by Institute of Chartered Accountants of Sri Lanka. We say ICA Sri Lanka. Who develops Sri Lankan accounting standards? Institute of Chartered Accountants Sri Lanka. So guys, why do they use the word develop? Usually, guys, UK, what they do is they take UK only makes, okay, they only create new standards. So what they do, they take those UK standards, international UK standards, and they just make certain changes based on Sri Lanka's environment and their conditions, all those, and the laws given in the parliament. They just try to change a little, and they develop. Who does that? The Institute of Chartered Accountants of Sri Lanka. If they ask you who develops if they ask you who develops standards in Sri Lanka, standards are developed by ICA Sri Lanka, Institute of Chartered Accountant of Sri Lanka. So you all might have heard this term, right? This institute. Some of you all might have already gone there, visited that place. Okay. So guys, accounting standards are needed to maintain quality and consistency of financial statement. Why do you need accounting standard? Because, guys, it helps to maintain quality and consistency. Because of this standard, guys, if you have 5 to 6 companies, for example, let's say company A, company B, company C, company D. So guys, every company have to follow standards. Right now, C can't say, no, I don't like standards, I'm not following. C can't do that. Everyone have to follow. So guys, because of this, because everyone have to follow the quality, the information you're giving, the quality is very high. If the quality is high, what will happen, guys? Can you all tell me? I want you all to send me answers. Tell me, if the information quality is high, what will it lead to? What will it lead to? Just tell me your ideas. It's okay to make mistakes. Just tell what you're thinking. If your information quality is high, what will it lead to? Yes, guys, decision. Guys, now if you give very quality information, the stakeholders, they will be able to make a good decision. Okay, guys, if you don't have a good quality, what will they do? Now, a business, they will always slowly overstate their profit. They will always try to show a very good profit. So guys, that means now the stakeholders, when they see A's information, they will think, okay, this is a very good business, I'm going to invest in company A. But they really don't know that this company has cheated. But guys, because of accounting standards, A can't do that. A knows if they do that, they're going against law, they will be punished. So guys, every company will maintain the same standards. So the quality is high and the consistency. What does consistency means? Consistency means, guys, you're not keep on changing from 1 year to year. You're doing every time the same thing because you're following same thing, guys. The stakeholders, they can easily compare your information because you're always following the standards. You're being consistent. Because of that, it is easy to compare the stakeholders. They find it easy to compare the financial statements. Okay, so these are, guys, these are the users of having standards. Okay, so now you need to know who prepares and what is the law coming under accounting standard. Preparing and presenting financial statements of a specified business enterprise should follow Sri Lanka accounting standards. So that means, guys, they are telling everyone who is if it is a company, they have to follow these accounting standards. Who recommends them? They are recommended by Sri Lanka Accounting and Auditing Standard Act number 15 of 1995. So guys, the law which comes, the legal background which comes under the standards is Sri Lanka Accounting and Auditing Standard Act number 15 of 1995. This is the legal background, the law, the act which is passed by the parliament regarding accounting standards. Okay, regarding accounting standards. Now see the next one. Okay, so the Sri Lanka Accounting Standards Committee has been established as clearly stipulated in the Sri Lanka Accounting and Auditing Standard Act number 15 of 1995. So guys, this act, which is the legal background of the accounting standards, it clearly says that you should have an accounting standard committee. Okay, the standard committee is the one, they are the one who will now in this who develop standards. The standards are developed by Institute of Chartered Accountants of Sri Lanka. What is the legal background behind the standard? The Sri Lanka Accounting and Auditing Standard Act number 15 of 1995. Okay, so guys, Sri Lanka Accounting Standards Committee. Okay, these are like the legal bodies below this standard act. Now, if you say, see guys, this Sri Lanka Accounting and Auditing Act number 15 of 1995, below that, guys, there are two legal bodies, statutory bodies, means two legal bodies. One is the Accounting Standards Committee and the other one is the Sri Lanka Accounting and Auditing Standards Monitoring Board. What does that mean? That means, guys, there is a board called Sri Lanka Accounting and Auditing Standard Monitoring Board. What will they do? They will check with the Sri Lanka accounting standards. They are every company, whether they are following the Sri Lanka accounting standards. Guys, just giving the standard is not enough. Okay, for example, if I just give the standards and not monitor whether they are actually following it, guys, that is not enough, right? That is not enough. Do you know whether they will actually follow it? So because of that, there is a board which is called the monitoring board. This board, guys, what will they do? They will examine whether the standards are followed by the business enterprises when they are preparing accounts. When they are preparing financial statements, guys, if they are not following, then they will take necessary action. Necessary action can be fines. They will be fully closed down. They can't do any more business. It depends on how far they have done the mistake. Okay, so guys, if you don't follow, you go against the law, you will get punished. Clear? So this was a question. Okay, this was a question asked 2012 paper. They ask you what is the two statutory bodies which is established under the Sri Lanka Accounting and Auditing Standard Act number 15 of 1995. This was a 2011 past paper question. The answer should be the Sri Lanka Accounting Standards Committee and the Sri Lanka Accounting and Auditing Standard Monitoring Board. So this committee is like they are the one who prepares the standard. This monitoring board is the one who checks whether the organizations are following what they have prepared, whether the organizations are following them. Clear? So guys, that is done. You now know the summary. I mean, you have an idea what is an accounting standard. Guys, accounting standards you have to follow. It is compulsory. Okay, so guys, now this is something different. Okay, after accounting standard, this is something different. Now we are going to study. That is the conceptual framework for financial reporting. We say the conceptual framework for financial reporting. What is a conceptual framework for financial reporting? Okay, now this actually conceptual framework, it's very easy to understand. Now in this accounting standard, you all heard the words act and monitoring board. There were technical words, right? But this conceptual framework, you all will find it easy to understand. Okay, so what is a conceptual framework? Conceptual framework can be defined as a system of ideas and objectives that will lead to a creation of a consistent set of rules and standards. Now listen, guys, what the problem the organizations faced was one accounting standard says something while the other accounting standard says another thing. It's contradicting between each other. So they found it very difficult because of that only, guys. One accounting standard says something else, the other accounting standard says a different thing. Because of that only, there was a conceptual framework, ICA Sri Lanka. ICA Sri Lanka, that is Chartered Institute of Sri Lanka. What they did, guys, they created something called the conceptual framework. What does this conceptual framework do? Now, I told you this accounting standards, one is telling something, another definition. In another standard, they are telling another definition. What did the conceptual framework do? They tried to connect all these standards. They are trying to connect all these standards in order to ensure they are consistent. Consistent means, guys, that one standard is not going to contradict. It is not like now if one standard is saying something, the other standard is saying something, it's difficult to follow, right? You are confused. So what did this conceptual framework do? It made consistent. So in the conceptual framework, guys, certain common common definitions were given, so that every standards have to follow this definition. Okay, so conceptual framework was like a guideline. When the standards didn't give you a proper definition, or when there is a problem in the standards, the conceptual framework helped. Okay, the organizations when preparing financial statements. Okay, guys, this conceptual framework is really important. Okay, and it's easy. Now, see, guys, when it comes to conceptual framework, you need to know what is it, the introduction and its need. Why do you need conceptual framework? Just now I told you, because the accounting standards, they were like contradicting, some were not clear, some information given in the standards were not clear. So because of that, what they did, this conceptual framework helped to solve that problem. Okay, and then guys, you have to know there are two types of financial statement, general and specific. Even in grade 12 first chapter we studied. Okay, general purpose financial statement, specific purpose financial statement. And guys, you're going to study today the elements of conceptual framework. This is the important part which you're going to study, the elements. So under the conceptual framework, the main 6 elements is what the conceptual framework is talking about. What is the objective? It is talking about the objective of preparing financial statements. What is the qualitative characteristics of financial statements? Guys, when it comes to the financial statements, the information, they have qualitative characteristics. No worries if you can't understand what I'm telling now, because we will go in depth one by one. Okay, so guys, and then after that, elements of financial statement. Elements, you all know already. What are the elements of financial statement? Asset, liability, income, expense, and equity. Then you're going to study the definition of them. You're going to study what is an asset, what based on the conceptual framework, what is a liability. You're going to study. And recognition, you're going to study, guys, how are you going to recognize them? How are you going to recognize? And then you're going to study what is the measurement. How are you going to measure it? How are you going to find the value of it? So these are the elements which you are going to study under the conceptual framework. So first of all, let's go now. A conceptual framework can be defined as a system of ideas, objectives that lead to a creation of consistent set of rules and standards. It helps us to be consistent. Specifically, in accounting, the rule and standards set the nature, function, and limits of financial accounting and financial statements. Guys, it helps you to find a boundary. Okay, in your financial accounting, it will help you to set a boundary. This conceptual framework helps to set a boundary, a limit based on its nature, its function. Okay. And guys, who prepares, who develops the ICA Sri Lanka? Just like standards, even the conceptual framework is developed by ICA Sri Lanka. ICA Sri Lanka. Okay, so guys, now let's go. The main reasons for developing an agreed conceptual framework that it provides. So guys, see, now they are telling you what is the main reason they started developing this conceptual framework, because they already have standards, guys. Even though they have standards, why did they develop this conceptual framework? See, they can ask you. So guys, the first one is a framework for setting accounting standards. Guys, it's like a framework. In order, it helps to set accounting standards. This conceptual framework, it helps to set accounting standard. What does that mean? When the preparers, the people who, when they set standards, when they are trying to make new standards, okay, what they do is, guys, they will check this conceptual framework. Okay, it is like a guideline. It helps them when they prepare the standards. Okay, a basis for resolving accounting disputes. I told you guys, now each standards, they can have certain items which contradict between each other, but guys, when it comes to conceptual framework, it is solving this problem. When there is a problem, when there is an accounting dispute, you have to go and refer this conceptual framework. It helps you to resolve. Okay, a fundamental principle which do not have to be repeated in accounting standard. Guys, now whatever is told in this conceptual framework, it is actually not repeated in the accounting standards. Okay, what does that mean? That means, guys, for example, now what is the definition of asset is told in conceptual framework. So there will be no any standard which will define this because it's already told in conceptual framework. What is the objective of financial statements is told in conceptual framework. So then any other standards, they do not have to repeat them because it's already there in the conceptual framework. Now, some students, guys, they have a misunderstanding. They think that conceptual framework is an accounting standard. Understand, guys, it is not an accounting standard. Conceptual framework is not an accounting standard. Okay, so guys, now we are going to study one by one elements of the conceptual framework. The elements of the conceptual framework, guys, we are going to study one by one. Okay, so first of all, let's go. Okay, first one, objective of general purpose financial statements. Guys, like they can test you this. They can ask you based on the conceptual framework, what is the objective of general purpose financial statements? First of all, you should know what is general and specific. Guys, when it comes to financial statements, usually they are divided, called as general and specific. General means, guys, you're preparing financial statement as a common basis where everyone can get use of it. You call it as general purpose. For example, you don't specifically think of someone and prepare this. You will check everyone's common need, all the stakeholders' common need, and you will prepare it. For example, let's say you have government as your stakeholder, customer, you have competitors. So you don't think, okay, I'm preparing for the customer. You don't think like that. You just prepare a common financial statement, which you call as the general purpose. Example for general purpose is statement of profit or loss, financial position, all the 5 components, cash flows, notes. We have studied, right? All these 5 components, we call it as general purpose. Specific purpose means what? Now, someone is specifically requiring a particular information. You only prepare it for that specific party. For example, let's say now the bank is asking, you need a bank loan. You need a bank loan. You go to the bank and say, bank, can you give me a loan? Will the bank just give you a loan? No, bank is not just going to give you a loan. Guys, you have to show something as proof. So the bank, what will you do? You will prepare certain set of accounts specifically for them so that they will be willing to give you a loan. You will tell, okay, this is our future. We will earn this much income, this much expenses, this much profit will be there in the future. This much cash will be there. Because of that, we can pay you the bank loan in the future. So you're specifically preparing for them. Or maybe, guys, managers ask, you are the accountant. Manager is asking, can you quickly prepare me a report right now? So you're preparing based on the needs of the manager only. Specific purpose. General purpose, guys, you prepare for a period. For example, annually once, you will prepare general purpose. But if it is specific purpose, you will prepare based on the particular need. Okay, for a particular person, you will prepare it. I hope you're clear. So guys, now we are going to study the general purpose. What is the objective of general purpose? That is a financial statement which is prepared based on the common needs of the stakeholders. Example, statement of profit or loss. You prepare to find profit or loss. It's a financial statement you prepare. Okay. So the objectives of general purpose financial statement is to provide financial information about the reporting entity. Okay, yes, thank you. Yes, Khadija, I will. Okay, so guys, up to here, if you have any doubts, ask me. Guys, if I am going fast, please let me know, okay? If I am going fast, let me know. Guys, up to here, are you all clear? If you all are clear, raise your hand. Up to here, if you all are clear, please raise your hand. When I'm going fast, just make sure you let me know, okay? So that I can slow down. Because I'm not seeing your faces, right? So I actually don't know whether I'm going fast or slow. Okay. So guys, now the first element we are going to study is the objective of general purpose. What is the objective? So they can ask you this, guys. So you need to know. Wait, there's a question, guys. Wait a minute. Khadija, which one you're talking about? Okay, so guys, it's like this. I'll just go through once again, guys. Conceptual framework. It is prepared by whom? It is prepared by the it is developed by ICS Sri Lanka. That is in the Chartered Accountant Sri Lanka. They only prepare, guys, the conceptual framework. Okay, so now conceptual framework is not an accounting standard. Accounting standards, guys, it is a set of rules, right? So this conceptual framework actually like helps when you prepare accounting standard. It helps, and the users, they find it easy because of this conceptual framework. Okay, because they provide certain definitions and they say what is the objective and all those. Okay, so it helps to be consistent, guys. It helps to be consistent because certain standards, guys, they contradict. They have problem between each other. Because of that, they have eliminated these problems and they have developed something called the conceptual framework. Okay, where this conceptual framework, it helps you resolve all the disputes, accounting disputes. Okay, and guys, and then if you have like in the standards, they don't have to repeat it again. For example, this conceptual framework will define what is an asset. So that is not repeated again in another standard because it's already defined in the conceptual framework. Okay, so what is general and specific financial statement? Is general purpose is where, guys, you are preparing financial statement based on the common needs of every stakeholder. That means, guys, you don't specifically see, okay, what is this stakeholder asking, what is this stakeholder asking. You don't specifically see. You just prepare for everyone. You just prepare a common. But specific purpose is where, guys, you prepare it for a specific need of a stakeholder. If a stakeholder is specifically asking you something, you prepare. Just like I told, now you need to take a bank loan. So the bank is asking you certain information. So you have to specifically prepare based on the requirement of the bank. If the manager is specifically asking, you have to prepare based on the requirement of the manager. For example, now my manager comes and tell you, can you give me about this machine? About this machine, can you make a report? Okay, how many products did you produce? What is the date you purchased this machine? You will give every information about this particular machine. So you call this guy specific purpose. It helps you to, it is where you give information about this particular purpose. Are you clear now? The student who asked me, are you clear? Okay, so guys, now we are going to study what is the objective of general purpose financial statement. So you know there are two types, specific and general. Now we are going to study in conceptual framework. They only talk about this general purpose. General purpose. Okay, so what does general purpose financial statement? What is the objective? This is the answer you should give. Guys, the objective is to provide what information? Financial information. Usually, guys, if you take accounting is divided into two. Accounting is divided into two, financial and management accounting. You all have studied in grade 12, right? Financial accounting and management accounting. So now, usually, guys, general purpose is financial accounting. General purpose is financial accounting. So that means, guys, you will give information about you will give financial information. So we say the objective of general purpose financial statement is to provide what information? Financial information. Remember, what information? Financial information. About whom are you providing? About the reporting entity. You are providing financial information about whom? About the reporting entity. Reporting entity means the entity which is which you are preparing the financial statements for. For example, let's say for our company, if you are preparing financial statement, we are the reporting entity. Okay, so that is useful for whom? That is useful for the existing and potential investors, lenders, and other creditors. This is the third one you need to remember. So guys, you are providing what information? Financial information. About whom you're providing? About the reporting entity. Okay, that is useful for whom? The stakeholders. Who are the stakeholders they are mainly focusing on? You can't just say stakeholders, guys. Mainly, conceptual framework says they are mainly focusing on whom? Existing investors. Who are existing investors? The shareholders. Okay, existing investors are who? Existing investors are the shareholders. If you have gone and invested in the company, okay, that those are called existing investors. Potential investors, who are potential investors? These are the people who have the potential. They have the money and they are planning to invest in our business. We call them the potential. They have money and they are planning to invest in our business in the future. Who are they? We call them, guys, the potential. Yes, you might have heard the word future investors. Future. They have the money. They are waiting to invest in our business. We call it as the potential. Okay. Existing are the people who have already invested. Potential are the people who are willing to invest in the future. Okay, guys, can you all tell me what is called, who are lenders? Who are lenders? Can you all give me an example? Guys, y'all are asking me what is reporting entity. Reporting entity is your, guys, it is the company you are going to report about. Okay, for example, if accountants are preparing financial statements about ABC company, the ABC company is the reporting company. It is the reporting entity. Are you clear? Yes, lenders are the people. Who are lenders? Example for lenders are the financial institutions that make funds available to businesses. Example, banks. Bank gives us bank loan. Okay, and then what else? Leasing companies, they are all lenders, guys. They actually give us money. Okay, they lend us finance. So we usually, the main common example is loans. Okay, so the financial institution. Okay, and other creditors. Who are creditors? These are people you purchase goods on credit, so they need to know about our entity. Okay, why do they need information, guys? Why do they need information? So that they can make decisions. They need information so that they can make decisions. I told you guys, now the bank needs information. Why? The bank needs information so that the bank can make a decision whether to give us loan. Okay, so every party, for example, investors, why do they need information? Investors need information to see how much dividend they will get, whether to sell their shares, whether they are going to keep the shares or sell it back to the shareholders because they don't want another shareholder, investor. Okay, guys, so now listen, guys, if you can understand what is the meaning of this, it's not difficult. What is the objective of general purpose financial statement? What information does it provide? Financial information. About whom? The reporting entity. Which is useful for whom? Guys, these are the main stakeholders. That's why they have specifically given the name. Existing and potential investors, lenders, and other creditors, so that they can make decision about resources, about providing resources of the entity. What does that mean, guys? Now these people are the ones who gave resources to the entity, right? They are the one who provided resources. That means, for example, if you take the bank is giving loan to us. They are giving their resource, so they have a right to make a decision, right? They need information for that. For example, investors, they invested their money in our business, so for that they need information to make decision, because they provided us resources, guys. So that's why we say this is the objective of general purpose financial statement. Okay, just go through it once, guys, and tell me if you're clear. If you're clear with this definition, can you all please raise your hand? If you're clear, 100% okay with this definition, raise your hand. If not, read it again and ask me doubts. So guys, if you ask me like how am I going to take you all through this grade 13 syllabus, okay, if you join my private classes, guys, first of all, I will teach each standard. Now here there is one by one standard, right? And maybe we will do past paper questions, okay? So usually, guys, what I do is every chapter, after I finish every chapter, I will do like 5 to 6 part 2 past paper questions, okay? And then after that, part 1 of that particular chapter, usually after we finish the syllabus, guys, we will have like a revision program where we will be finishing 10 years past papers. That is going to be like 500 MCQs, where I will explain each and every word of the question, so you all can understand better. So that is how I usually do. And about the Tute, I will, guys, send a soft copy before the class, as well as I will be preparing like a book. Okay, for grade 12, I have already prepared, guys, and I have given to the students. For grade 13 also, like that, I will prepare one full book, which will have all the chapters of grade 13. So that is just one time. You just have to take it one time. So I will courier it to your places. Okay, so it will be binding, guys, so you can keep it for a long time. Okay, yeah, so shall I continue? Are you all clear? Yeah, it's like this. Who prepares, guys? These are prepared by the accountants. Accountants prepare it about whom? Reporting entity means, reporting entity is the entity which the business, for example, ABC Limited. Okay, so that is the reporting entity. Accountants will prepare, the accountants of that company will be preparing about the reporting entity. Okay, so guys, see, general purpose financial statements provide about the financial performance. What is that? Financial performance statement of profit or loss and other comprehensive income. Guys, you have this general purpose financial statements. They provide information about the financial performance. Performance means, guys, the results, whether the business have earned a profit or incurred a loss. Okay, so they will provide information about that. Not only that, they will provide information about the financial position. Financial position, what is the statement they will prepare? Statement of financial position. Okay, statement of financial position. And these are the main three. Okay, and the other one is changes in financial position. Can you all tell me what is the financial statement? Changes in financial position. What is the financial statement? Now, the objective of statement of profit and other comprehensive income is to provide information about the financial performance of the business, whether the business is earning profit or loss. Okay, the statement of financial position, the main objective is to provide information about the financial position of the business. Okay, and the other one is, guys, the changes in financial position. Please don't forget this. This was a past paper question also. Guys, another word. Now, if you take statement of cash flows, statement of cash flows provide information about the changes in financial position. Now, some students, when this was a past paper question, most of them got it wrong, because some students, what they thought was, when they gave the word financial position, they thought it is, okay, statement of financial position is the answer. Guys, if they just say financial position, it is statement of financial position. But if they say, guys, if they say that changes in financial position, they are talking about statement of cash flows. Okay, clear? Statement of profit or loss and other comprehensive income. It is a component. Statement of profit or loss and other comprehensive income. Okay, so guys, these are the main three financial statements. This general purpose financial statements, these are the main three. Okay, even you can say statement of changes in equity notes. Those are it's coming inside. Okay, but the main three are these. Okay, clear? Now, guys, we are going to study the underlying assumption in preparing financial statement. Guys, the main assumption when you prepare financial statements, you have to make an assumption. The assumption is we make going concern concept. Okay, what is the main assumption when you prepare financial statements? When you prepare financial statements, guys, you have to make an assumption. That is what you call as the going concern concept. Okay, they can ask you this also. Okay, but I don't think they will ask, because it's very easy. Or most of the students, they know the answer. What does that mean? What is going concern? Going concern means, guys, we always assume whenever we do financial statements, we always assume that the business will be operating for a foreseeable future. That means, guys, when you prepare financial statement, we always assume that the business will be going for an unlimited time. Okay, now guys, whenever you start a business, you don't start thinking that I will bankrupt tomorrow, right? I will close down my business tomorrow. You never start like that, right? You always start a business thinking that you will go for a forever. You will be doing the business forever. Same like that, guys. Whenever you prepare financial statement, you always assume that you will operate, you will continue its operation for a foreseeable future. Okay, see, going concern assumes that the business will continue its operation for a foreseeable future. Foreseeable future means an unlimited time. Unlimited. It will continue forever. That is an assumption. In reality, it doesn't happen, right? It depends on the business. Sometimes it can bankrupt tomorrow, next year, after 5 years. It depends. But we have to make this assumption. Then only we can prepare financial statements. If we make this assumption only, guys, it is easy for us to prepare financial statement. Okay. No, guys. Changes in financial position is not statement of changes in equity. Changes in financial position is statement of cash flows. Statement of, don't get confused, statement of cash flows. Okay, so fine. Now guys, we are done with the first one. We are done with the first element under the conceptual framework. Now let's go to the second one. Now you all might be thinking, okay, why this chapter is fully of theory? Actually, guys, it is not fully of theory. In order to do company accounts, you need to know this theory. Okay, in order to do company accounts, you need this theory. Just for a change, guys, I will show you. I'll show you, for example, for a change, I'll quickly show you a question. Wait. So guys, in order to do company accounts, okay, so in order to do company accounts, I'm just showing you all a past paper question. This is past paper. So now this is company accounts question. Okay, so this is a company accounts question. It will be like 2-3 sites. Okay, it's a big question. So there are so many adjustments. See, there are so many adjustments you have to do. So guys, if you want to do these adjustments, first of all, guys, you need to know the theory behind it. You need to know what each and every standard. This is 2019 company accounts. Okay. So for everything, guys, now when they are talking about income tax, you need to know the standard behind income tax. For that, you have to study theory. But believe me, guys, after you are done with the theory part, every time you will do questions about it is all accounting, not more, like maybe like 10% is theory, but without knowing the theory, you can't do accounts. You understand what I'm saying? Okay. No, it is in part 1 as well as in part 2. It will be there both in part 1 as well as in part 2. Okay. So it is a compulsory question. You cannot avoid it. See, they will say it is compulsory. Answer 5 questions only, including 1 and 2. So that is going to be a compulsory question. If you take 2020 past paper, the first question will be company accounts. It is a compulsory question. You cannot avoid it. Okay, and if you take part 1, I can tell you exactly like in average how many questions they will ask you. I can tell you. Wait, if you give me 1 minute, I'll tell you all, guys, how many questions might be there in part 1 when it comes to this chapter. Okay. Only this chapter. Okay. Only this chapter. So that is 9 to 10 questions. Only chapter 11 I'm talking about. Only 9 to 10 questions. That is how am I calculating? The chapter 11 has 91 questions, which is 10 years past paper. So 91 divided by 10. At least 9 to 10 questions will be coming in part 1, as well as in part 2, there will be a full question which is compulsory. So guys, it is not something you can avoid and be careless. It is very, very important. Okay, and most of the students, they are suffering in this chapter because they ignored it. Believe me guys, the 2021 A-level students, they message me nowadays telling me, can you please send me all the recordings, because I don't know anything about company accounts. I can't do that because I didn't study properly. I don't know these standards. If you don't know the standards, you can't do company accounts. So guys, that's what I'm telling, because this is a beginning for grade 12s. I mean, the grade new, if you are grade 13, that is 2022 A-level students, please focus from the beginning so that you don't regret later. You don't feel difficult later. If you study from the beginning, it's not going to be difficult. Okay, so guys, now we are going to the second conceptual framework element, the qualitative characteristics of financial statements. Okay, so guys, if you take information, information has a quality. Okay, if you take an information, guys, for it to be useful, for the information to be useful, guys, it should be in a good quality. Then only it becomes useful, guys. So then we have qualitative characteristics of financial statements. This is like the summary of it. It is divided into two, fundamental and enhancing. Okay. And then after that, fundamental is divided as relevance and faithful. Enhancing is divided as comparability, verifiability, timeliness, understandability. Why am I not explaining it? Because we will be going one by one now. Okay, we will be going one by one now. Now guys, see, what if information is to be useful, it should constitute of good qualities. Guys, for an information to be useful, it should have some good qualities. Guys, only the information which is useful, you can record it in your financial statement. You can't just record everything you want. Only if it is useful, you have to record. For an information to be useful, guys, it should have a good quality. So usually quality you divide it into two: the fundamental qualitative characteristics and enhancing qualitative characteristics. You have to divide it into two: fundamental and enhancing qualitative characteristic. Okay, so fundamental, what is a fundamental qualitative characteristic? Fundamental, the word itself says mandatory, important. Guys, if you take information, the information, it is a must to have this characteristic. The fundamental characteristic, it is a must for the information to have it. Okay, so guys, if these characteristics are not included, there will be, the information will not create any value to the users. So that means, guys, if you don't include fundamental qualitative characteristics, that information becomes useless. Why? Because it is important. It is important that it is included in every information. That is why we call it as the fundamental qualitative characteristics. Clear? Okay, you have to include it. So guys, then after that, let's go to the next one. First of all, under fundamental, you have two main types. One is relevance, the other one faithful representation. Now you are going to study what is relevance. Okay, relevance, the information should match with the informational requirements of the users. Relevance tells, guys, for example, guys, you're coming and asking me, Miss, can you please explain me what is an asset? Now, guys, what was your requirement? Your requirement was for me to explain you what is an asset. Now, guys, I tell you, liability is a present obligation which arises as a result of a past transaction. I keep on explaining. Guys, Was that information relevant for you? Yes or no? Was it useful? Was it useful? Please reply. If not, it will be boring. It was not useful, right? Because you asked me what is an asset, but I explained to you what is a liability. So guys, I am not matching with your requirement. Relevant means, guys, you should always match with the informational requirement of the users. Whatever the information the users are asking, you should be able to include it in your financial statement. If the users are really wanting to know the profit, you have to prepare statement of profit or loss and find the profit and give it to them. Include it in your financial statement. Then only, guys, you're matching with the informational requirements of the user. The user will ask a particular information. The user requires a particular. Users are stakeholders. So you should always try to match. You should always try to match it. Clear? If the financial information is to be useful, it must consist of the following sub-characteristics. So guys, what did I tell? Now under fundamental, understand this one, okay? How it is going. Under qualitative characteristic, you have fundamental qualitative characteristic. Fundamental qualitative characteristics, these are mandatory, important to be there in the information. Okay, so fundamental is divided into two: relevance and faithful representation. What is relevance? It is where your information, okay, it should always match with the informational requirements of the user. Now, guys, in order to be relevant, you have to satisfy three sub-characteristics. What does that mean? Now, if you want to be relevant, you have to satisfy three sub-characteristics. What is that? That is confirmatory value, predictive value, and you call it as materiality. If you satisfy these three only, guys, it becomes relevant. If you satisfy these three only, guys, what will it become? It will become relevant. Okay, so now you have a doubt. Okay, what does predictive value means? What does confirmatory value means? What does materiality means? Okay, guys, just give me 1 minute. Okay, guys, predictive value. Predictive value means, guys, the information you're giving should be able to predict the future. The user should have the ability to predict the future. Example, for example, let's say, guys, you need to know how much is the profit. Okay, now let's say the company says, okay, in the financial statements, the company says 2019 profit is 2019 profit is, let's say, 2,000 rupees, and 2020 profit is, let's say, 1,900. 2021 profit is, let's say, 1,800. Guys, can you tell me what will you predict about this company future? Predict means you should able to see the future based on the information they are giving. Okay, based on the information you're giving, you should be able to predict the future. Guys, based on the information they are giving, you know that in 2022, yeah, their profit is going to decrease. You can decide, okay, they are continuously profit is decreasing. That means, guys, in 2022 also, the profit will decrease than 1,800. You should be able to predict the future based on the information they are giving. Confirmatory value. Confirmatory value means, guys, you should be able to confirm the decisions which you have made. Based on the information the company is giving, guys, the users should be able to confirm about the decisions they have made so far. Now, guys, now the company says the profit is how much? 2019, the profit is 2000. Let's just make it a bit more low. Okay, that would be better. Let's say 2020, 1,000 rupees. 2021, there is a loss of 500. So, guys, now tell me, what can you confirm about your previous decision? Was your decision good or bad? The previous decision you made to invest in this company, was it good or bad? Was your decision a good one or a bad one? It was a bad decision you made. So, guys, what happened? Based on the information they gave, the users can predict the future, as well as they can confirm the decisions, the whatever decisions they made previously, they can confirm it. And, guys, they can materiality. Materiality means, guys, the decision, it should be affecting your if now, for example, the information they are giving, it should be material. Material means, guys, important, significant, so that it affects your decision. It affects your decision. Okay, guys, after class, what will I do is I'll give you proper definitions for this explanation so that you can write it down and understand. I don't think you all have hard copies now, right? So after I courier it to you all, I'll take your information. The students who are joining my class, I'll take your information and I'll courier it to you all. After that, I'll give you all these definitions. You can write it down in the queue. Okay, so you all understood, right? In order to be relevant, what is relevant? Relevant is where your information should match with the requirements of the users. In order to be relevant, you should have three things. Predictive value, it should be confirmatory value, material. Material means what? It should be important. Guys, for example, if the information is not important, it will not change your decision, right? For example, let's say maybe like this. Let's say your profit is, okay, let's say your profit in 2019 was 2,000 rupees. In 2020, your profit is 1,999. In 2021, it is 1,990. Guys, is it material? Is it material? Material means, is it big? Have the profit reduced very much? No, right? Just a very small reduction. So, guys, it is not so material for you. It is not so material. Material means, guys, it should be able to affect your decision. The information they are giving should be able to affect your decision. Okay. So, guys, now you're done with relevance. Now, let's go to the next fundamental qualitative characteristic. That is faithful representation. The next fundamental characteristic is what? Faithful representation. Faithful. The word says faith. Faithful. You're showing the true status of the organization. Guys, whatever information you're giving should show the true status. You can't just show which are fake. I mean, you should be able to show whichever is true about your organization. That is what true status means. Okay, so that means, guys, see, economic phenomena represented in financial reports should be faithfully represented. To be perfectly faithful representation, a depiction should have the following characteristics. So, guys, faithful representation means you're showing the true status of the organization. Okay, so that means whatever you're showing, the economic phenomena means the economic benefits and all which you're showing in the financial statements. Okay, that should represent true information. Now, guys, in order to be faithfully represented, you should have 3 sub-qualitative characteristics. If you achieve these 3 only, guys, you will be faithfully representing information. First one, guys, completeness. Completeness means, guys, you can't just give half information, right? You can't just give half information which is incomplete. Guys, when you give incomplete information, no one can make a decision. For someone to make a decision, guys, you have to give a complete information. Okay. For example, when you're telling a sentence, when you're telling a statement to someone, if you stop it in the middle, that person can make a wrong decision, guys. When you stop in the middle without telling the full sentence, they can make a wrong decision. So like that, even the users, when you don't give the complete information, they can make a wrong decision. Okay. Then the next one is neutral. Neutral means, guys, you shouldn't be biased. We say it shouldn't be biased, guys, not biased. Bias means, that means, guys, when you're giving information, you can't only see someone, okay, I have to give information only to the customer. You can't be biased for everyone. You should give equally. You should be fair. You can't be biased based on some customers, users, based on you can't just give information only to the investors, because, guys, general purpose financial statement, you give it to all the users, so you cannot be biased. Okay. Accuracy. Accuracy means, guys, information should be free from material errors. Your information which you're giving, it cannot have big errors. For example, if your profit is 2,000, you cannot, now for example, if you have a loss of 100, if you have a loss of 100, you cannot show it as a profit of 2,000. This is a big error. Okay, so, guys, that means, guys, you have to make sure the information you're giving does not have big errors, material errors. If it is just 1-2 rupees mistake, for example, instead of 2,000 in 2019, you have wrote profit as 1,999. That is not material. So 2001, 1-2 change, small changes, it's okay. Accuracy is telling, guys, you should make sure you are free from big errors, okay, which can affect the decision. Okay, then, guys, the next type we are going to study is enhancing characteristic. Enhancing, the word enhance, something is increasing. Okay, because, guys, if you have these qualities, your fundamental characteristic, it can be enhanced, it can be increased. Guys, the easy way to remember, I say my students, remember it as we cut. Okay, enhancing characteristics, remember until you're okay with it. For the first few times, guys, just remember it as a V cut. V cut means, V is for verifiability, C is for comparability, U is for understandability, T is for timeliness. V cut. Okay, now we will study one by one. Enhancing qualitative characteristic. What does that mean? Enhancing, these are characteristics which are not mandatory, but incorporating them enhances the value and usefulness of information to the users. Guys, these are not important. They are not mandatory, but, guys, if you include them, they will increase the value of the value and usefulness of the information to the users. It will increase the value, guys, if you include them. They are going to increase the value. Okay, guys, before I continue, I'll just tell about my classes because some students were asking. Okay, so, guys, your class timetable for 2022 A-levels will be Wednesdays 4 to 5 p.m. Usually I keep 3 hours per week. Okay, so that will be, guys, wait. So that will be, guys, Wednesdays 4 to 5 p.m. and Thursdays 7 to 9 p.m. Okay, Thursday 7 to 9 p.m. And then guys, if you want to register, what you can do is guys, you can deposit to this account details which I have shown here. If you want, take a screenshot of it, and then guys, you can send the slip to that particular number, include the name, subject, teacher's name, and month. What is the month you're joining? I mean, what is the month, what is the fees month? Okay, and guys, after you pay and you send the slip, guys, you will receive an admission number, and they will add you to a WhatsApp group. Okay, you will be added to a WhatsApp group, and you will receive a admission number. So just quickly take a screenshot so I can continue. So the time is Wednesdays 4 to 5 and Thursdays 7 to 9 p.m. Okay, I hope you all are done. Now let's continue. Guys, enhancing, what is enhancing? It increases the value of information, value and usefulness. For enhancing characteristics, remember, we cut. Okay, so guys, first one, comparability. We say, guys, the information should be able to compare. Guys, the users, they have to be able to compare it, guys. Whatever information you're giving, they should have the ability to compare it. They have to compare between two things, guys. Listen carefully. One is they should be able to compare the information with similar entities. For example, let's say you're a garment factory. So you're a garment business. Okay, so you should, now the users, they are, now let's say I'm an investor. I have 1 million. I have 1 million in my hand. Now I am confused. Should I invest in company A, which is also producing garments, or should I invest in company B? They are also producing garments. Is company A better or company B better? That's your confusion. So guys, now you should, as a user, now think you're the investor. You have 1 million rupees you're planning to invest. Now guys, the user should be able to compare. Guys, for them to compare, both of them should follow the same policies, right? They have to follow the same method of calculating. Whatever they do, guys, they have to follow the same methods, same principles, same policies. Then only, guys, users can compare. For example, you might not know it, just listen. You might have heard depreciation. Guys, depreciation, you can do depreciation two ways. One, you call it as straight line method. If you haven't studied, we will study it in the future. The other one, you call it as reducing balance method. Now, guys, if company A is following straight line method and company B is following reducing balance method, guys, can the users compare? Will the depreciation change? First of all, tell me, will the depreciation change based on the straight line and reducing? Do you get the same depreciation? No, right? You don't get the same depreciation. Straight line method gives you a different depreciation. Reducing balance method gives you a different depreciation. You get what I'm saying? So that means, guys, if company A is following straight line method, let's say their depreciation is 100,000. Company B is following reducing balance. Their depreciation is 90. Now, because of that, as an investor, you are finding it difficult to compare because both companies, they have used different method to calculate depreciation. Usually, guys, we say you should be able to compare. The users should have the ability to compare. Let's say, guys, all the garment factories, they are following reducing balance method, and you are company A. What should you do? In order to achieve this characteristic, in order to achieve this enhancing characteristic, your company A, what should you do? Others, all the garment factories, they are doing reducing balance method. They are following reducing balance method when calculating depreciation. But you are also a garment factory, you're following straight line method. What should you do in order to be able to compare? Yeah, you also should change, because guys, all the other companies in the garment industry, they are following reducing balance method. You should also change to reducing balance method, so that every users, they can compare information between each other, the similar entities. So guys, that is the main use of being able to compare. Then only the users can make decision, guys. Now both of them, if they are following straight line method, reducing balance method, then guys, the stakeholders, they will have a they will be able to compare, because the base is the same. The base is the same. Both of them are following the same method. So guys, we say in order to be able to compare, you should follow the same method, principles, and policies. Then only it is easy to compare. And not only that, you should make sure, guys, when it comes to comparability, there are two things. One is it should be able to compare the similar about the similar entities, information about the similar entities. Not only that, it should be able to compare the same entity for another period. Guys, let's say they are now in 2019, you are following straight line method. In 2020, you're following reducing balance method. Now, guys, when it comes to like that, now also the users will be unable to compare, because, guys, 1 year you're following straight line, the other year you're following reducing balance method. So that is difficult for the users to compare, right? They can't check whether the business is earned, if the profit has increased or not, because the method you chose is different. Because of that, depreciation might be different. So how can you compare it? You understand what I'm saying? So guys, when it comes to comparability, we say the organization should have information. They should always have information, so that users can compare with the similar entities, as well as in about the past information. Okay, of about the another period, that means 2018, 19, 20, they should be able to compare with all the previous years. That means, guys, you should follow the same thing continuously. What do you call that? When you're following the same thing continuously without changing, what do you call that word? What do you call that? Being what? Being consistent. Very good. Guys, we say that you should always be consistent. Write it down, guys. When you are consistent, you can compare. So if you are being consistent, that will lead to comparability. When the organizations are consistent, that is going to lead to what? That is going to lead to comparability. So you should always be consistent when you're giving information. Okay, then guys, next one, verifiability. Verifiability means, guys, the verifiability helps assure users that the information provided are supported with relevant evidence to confirm it. I'll ask you all a question. Can you all tell me what is the basic? You all have studied this. Anyone here have studied this? Okay, verify. Verify means it is providing some evidence that actually occurred. What is the main evidence for a business? You know that. Okay, information that it actually happened. What is an evidence? Very good, Khadija. What about others? Source document, correct. Fazha, Farha, yes, Sheikha, correct. Source document. Guys, source document is the evidence. Example for this, you can say, guys, source document. That a transaction have actually occurred. What is the evidence you have? You can show the source document. That is an evidence. Not only that, guys, we can even say audit report. Okay, audit report is where, guys, the auditors will come and they will check our financial statement to see we have provided true and fair information, whether our financial statements are prepared properly, whether they are having true and fair information. Auditors will check our financial statement and give a report to the shareholders, to the users. So then, guys, this audit report is another example for evidence. This audit report helps the shareholders, okay, to believe that the organization managers, they have the board of directors of the organization have prepared information properly without having any frauds or anything, because auditors will confirm it. So examples, you can say source documents. The other one, you can say audit report. Audit report. Please write it down. Okay. So, guys, next one, timeliness. What does timeliness mean? Timeliness means, guys, you should always give information on the correct time. Guys, me coming and telling you all that maybe after your A-levels, after 1 month, I come and tell you all, guys, please study this. This will come to your exam. So you will feel that's a useless information because you're done with your A-levels. So that's why they say every time you should give information on the correct time. If the users need information, you should always give on the time, the prompt, the correct time. You can't delay it. When you delay, it becomes useless. It becomes useless when you delay the information. Audit report means, okay, one student is asking, what is an audit report? Audit report means there are people called auditors. They will come and check our financial statements after the accountants prepare financial statement. There will be an external people called auditors. They will come and check our financial statements to see whether if it is prepared correctly. If there are any frauds, any mistakes, they will come and check. And they will give an audit report. In that audit report, they will tell that all the information are true and fair. Okay, there are no mistakes or anything. They will give a confirmation to the shareholders. Clear now? So, guys, next one, timeliness. Timeliness means you should give information on the correct time so that it will help the users to make a correct decision. If you give it late, it becomes useless. Understandability. Guys, now the problem is usually you should understand users don't have very much knowledge about accounts. Okay, now for example, guys, all the rich people haven't studied accounting, right? All the people who have money, have they studied accounting? You can't say that. Okay, even doctors, they are rich, they have money. Now they want to come and invest in our business. Okay, now they come and read our financial statements and all, they can't understand. Will they feel like to come and invest? No. So that's why, guys, we say an average person. Okay, an average person who can read and write, they should be able to understand whatever information you're giving. You can't use jargons and difficult words where the users, they will find it difficult to understand. You should make it very understandable for an average person. For an average person like you and me, when you are reading the information they are giving, you should be able to understand. Okay, it should be very clear, so that they can make decision. Okay, guys. So I thought to stop it here. We'll stop it here, guys. I think that's enough for today. We'll stop it here. So if you want to join my class, you can contact me. Okay, you can contact. This is my phone number, 077 875 9158. The next class will be on Thursday, guys. Yeah, you have to join. Of one, you have to, if you want the books. Okay, so guys, see, you can message to this number if you want any more details. The next class is on Thursday, 7 to 9 p.m. Okay. The next class is on Thursday, 7 to 9 p.m. If you want the PDF of this cute, and if you haven't got it, just message me. I will send it to you all. Okay. So that's it for today, guys. I hope you all found it useful. Take care and study well.